Very good morning to all of you. Again, we are continuing the same series of financial terminologies. This is a part 3. Yesterday we started our part 3 of financial terminologies, and we are continuing it for two or more videos. Some more terminologies are there within this part 3. So whatever the terminologies that I am discussing at present, those terminologies are anyhow they have already appeared in the UPSC preliminary examination 2018. So indirectly what I am trying to do is I am covering all the Indian economic questions which were asked in the UPSC 2018, and also giving you a little bit of extra information with regard to that particular concept, or you can say that particular terms. Fine. So today we are going to discuss about very important term, that is capital infusion. That is capital infusion. The very general definition of capital infusion is the injection of funds or money into a ailing company or ailing business or industry. Ailing means sick, means the company or business or industry which are not getting profits. They are under loss making. Okay, these companies require what? This company requires some amount of funds or money to be poured in so that they can revive their health, they can revive their operations. In this way you can say it. Let us take a very general example with regard to this capital infusion in our daily life. Concentrate on my voice so that you can properly understand it. Suppose your father earns a particular salary of 10,000 rupees, and this 10,000 rupees, let's suppose it is not sufficient to carry out your expenditures. Means to pay the electricity bill, to pay your tuition fee, to pay your education fee, to buy medicines for your mother, etc. So whatever, think in this way that whatever your father is earning, that is not sufficient to meet the expenditure of your house. What he will do? Okay, he will borrow from the relatives, he will borrow from the friends, or he will take a loan from the bank, right or wrong, or he will take a loan from any financial company. Okay, Muthoot or chit fund, whatever it is. The moment you get the money from any of these sources, what will happen? Your home will be happy, right or wrong? Then he can meet out all the expenditures which he was not able to do before, right or wrong? Right. So the moment he get some money is injected in the home to perform various other operations, what happen? Everybody is happy and everything will go smoothly. In the same way, suppose a company or a business it's not working, it's loss making company. So little bit of funds or money if you pour in it, what will happen? They can revive. Okay, they can again restructure themselves and they can get back on the track of doing the operations, in the hope that they will become profitable in near future. To meet out certain urgent expenditures, so you need what? Capital infusion. This is a very general explanation, and the very general definition I have given you, the bookish definition I have given you with regard to capital infusion. Sometimes this capital infusion is also called as cross subsidization. You are all very aware of this fact. Subsidization means, subsidy means what? Giving financial support. Free, generally it's always free. So A is a company and B is another company. Both are the companies of one particular person. A is a company, B is a company. A is a profit making, B is a loss making. So as it is a profit making, some amount of A's profits are injected into the B, which is not profitable company or which is in loss. So what happened? A is giving, A company's profits are trying to help out, or trying to give some financial support to this ailing or sick B industry. That's why it is also called as, if it is happening within the company in this way, okay, then it is called as what? Cross subsidization also. Okay, remember this. But you have to remember one important thing here. These two are the very general definitions, okay, bookish definitions. With regard to our Indian economy, capital infusion, you generally come across this word with regard to banking. Whenever you hear about this capital infusion, it means that it has something to deal with the banking sector, our ailing banking sector. Generally I'm saying. Okay, so let us see the economic terminology or economic concept of capital infusion with regard to Indian economy. Capital infusion is nothing but government infuses nothing but injected capital, nothing but that is also money. So government infuses money or capital into public sector banks, to support what? To support credit expansion, means to support their capacity to give loans, What is happening in our country? Okay, remember this thing and listen to me properly. What is happening in our country? So whatever the banks, they have given loans to various borrowers, needy borrowers. These borrowers have defaulted the loans. It means what? They are not giving the principal amount, not they are giving the interest amount, not they are paying the EMI on time. Okay, let's suppose you are a bank, you are having 1 crore rupees. All of that 1 crore rupees you have spent, okay, or all of that 1 crore rupees apart from CRR, SLR, this criteria, after finishing of whatever the criteria is there with regard to RBI regulatory, okay, mandate. So I'm not taking all of that into account. So I understand in this way only. Suppose you are having 1 crore rupees, all of that 1 crore rupees you have given loans to different borrowers. Find out, right? So, okay. But what happened? Nobody is giving you principal amount, nobody is giving you what? Interest, nobody is giving you EMI. So there are some credible customers are still waiting on the line to take loan from you. Okay, but when you get money from there are different borrowers who have taken loans. Okay, when you get the interest from on your loans, then again you can spend, again you can give the loans to these credible customers, right, around who are still waiting to get a loan from you. Okay, so when you don't give loan to this credible customers, okay, this is a very what risk-free customers. What will happen? These people will not do any investment. They wanted to start any industry, may say, or service or manufacturing unit, may say. So they will not start any. They will not do any investment because you don't have a money, right? When they are not doing investment, when you don't do any investment, there won't be any production also. The more you investment, the more the production will be. Okay, so when you are not doing investment, okay, when they are not doing investment, no production, again the economic growth will be decreased, right? And government does not want it. Government want continuous loans to be taken up, okay, by the entrepreneur, so that economic growth will spur. Okay, so this is a general concept that you have to understand. In order to keep the cycle going on, okay, in order to keep the cycle of giving loans to the credible customers, genuine customers who wanted to take genuine loans and who wanted to pay on time, they should not be demoralized or discouraged. For that, government, what does it do? It gives some amount of capital to the banks so that they should continue the cycle of giving loans. Okay, this is what happened in our country, and this is what we call as capital infusion. Government infuses capital into the banks to support what? Credit expansion. Okay, and this particular, whatever the government infuse the capital, it also helps the bank to tie. Okay, it also helps the banks to overcome the problems or losses that they have incurred because of non-performing assets. Because of what? Non-performing assets. You know that non-performing assets are nothing but, in banking terminology, assets means loans. Asset means loans. Remember this. You have given a loan to somebody, but he is not giving principal, not giving EMI, not giving the interest. In this case, what you say is your loan is a bad loan. Okay, your loan is a bad loan because after giving the loan, he is not paying you either the EMI, either the interest, either the principal amount. So you classify your such loans into one category called as bad loans. Okay, and in banking sector, in banking industry, loans are given a terminology called as assets. Okay, you may also call that bank loan as bad loan as non-performing loan also, right? Because it is not performing. When you can say that loan is performing, when you are getting the EMI, when you are getting the interest on time, okay, then you say that your loan is performing. Because you are not getting any of these on time from the borrowers, You classify all such loans into bad loans, or you can also call them as non-performing assets, NPAs. Okay, so capital infusion solves two problems of the bank. One, it helps to enhance their credit expansion, okay, because for economy investments are required. And other important aspect is it also helps the bank to overcome the problem of NPAs, overcome the problem of NPAs. So let us see one important merger and its benefits, which were asked. Okay, which is a concept, and it was also asked in the preliminary UPSC 2018 examination also. Okay, what happened in August 2017? The Lok Sabha has passed a bill. The bill was read like this, titled as State Banks Repeal and Amendment Bill of 2017. Okay, with this bill, what government did? Government amended the SBI Act of 1955. Okay, one more point I have to tell you here. SBI Bank of India Act of 1955. Under this act, there was also some references were there, some clauses, some sections were there with regard to SBI and its subsidiary banks also. With regard to subsidiary banks of the SBI, or you can say with regard to associate banks of SBI, such as State Bank of Hyderabad, State Bank of Travancore. So with regard to these banks also, there was some references, some sections, some clauses were there in SBI Act of 1955. With the passage of the SBI State Bank Repeal Amendment Bill of 2017, okay, this bill has amended SBI Act of 1955, and whatever the references were there with regard to subsidiary banks, they were also removed, but with this particular amendment. Okay, with the passage of this State Bank Repeal Amendment Bill of 2017, the subsidiary banks, you see here, the subsidiary banks have ceased to exist. Okay, which means it has no existence. Now you do not find SBH, okay, you do not find State Bank of Mysore. So such kind of boards you will not see in your locality or anywhere in the country. Because with this amendment bill, what happened? With this amendment bill, all the subsidiary banks, what happened to them? They have ceased to exist. Of course, when they are ceased to exist means they have all got merged into SBI, the parent bank, the apex bank. Okay, when there is no subsidiary banks are there, then why do we need a subsidiary act? So what they did is, with this particular amendment of 2017, okay, as a State Banks Amendment, SBI Subsidiary Banks Act of 1959, it was also repealed, and State Bank of Hyderabad Act of 1956, this was also repealed. With this, you can also interpret that SBI Subsidiary Banks Act of 1959 was there. Okay, with that particular act only, all these subsidiary banks were created, and for Hyderabad, State Bank of Hyderabad, a separate act was there. Okay, so remember this. So what happened with the State Bank Repeal and Amendment Bill of 2017? This bill amended this SBI Act of 1955 and removed all differences with regard to subsidiary banks. Along with this bill also repealed Subsidiary Banks Act of 1959 and State Bank of Hyderabad Act of 1956. These are the various banks which has been now ceased to exist. Okay, fine. State Bank of Hyderabad, it was originally constituted at Hyderabad State Bank under the Hyderabad State Bank Act, and later it was renamed as State Bank of Hyderabad, okay, with the Act of State Bank of Hyderabad Act of 1956. Okay, it's a very general GK information for you, factual one. Okay, so what is the use of mergers? Why do we go for mergers? The benefits of mergers could be rationalizing the resources. Always remember one thing, rationalizing means utilizing the resources in such a way that even one penny of it, okay, even every penny of it should be worth. Okay, no underutilization, no wastage. Okay, every penny, okay, every resource, every percent of the resource have to be utilized, okay, to its optimum or maximum level. Then you call it as rationalization of resources. Maybe human resources means the staff is overstaffed after merging. Okay, because you are having your parent company A, but what happened? You floated B, C, D, E, F. You floated many of the other companies also, But what happened? You are having 2-3 CAs here, and every other bank has 2-3 CAs to look after it. Okay, then you don't need these many human resources. If you cut down the human resources, okay, for total overall your A, B, C, D, E, F, whatever the companies you have floated, if you are putting only 5 CAs, that would have been enough. Maybe before they were 8. Maybe before they were 8. This is called as what? Proper rationalizing the resources. Okay, so mergers will generally help to rationalize the resources, means to utilize the resources at the optimum or the maximum level, and it also reduces the cost. With the example you might have understood, if we have decreased the CA from 8 to 5, then you don't have to give the salary of the other three. I have just taken the example of human resources. There are many other aspects are there with regard to rationalization of resources. Capital resources are also there. Okay, infrastructural resources, whatever are there, they are also what place managerial cadres, many are there. Okay, but you remember in this way, that is also enough. With the mergers, what happens? We can rationalize the resources, means we can utilize the resources with the optimum or maximum level. It reduces our cost, improves our profits, and also when all the banks have merged, what happened then? All the money of the banks has been now got to the parent bank of SBI. Okay, so SBI is now floated with lot of money from its associate banks. So SBI has got some more amount of money with them, and you know the concept of monetary policy. The more money means less interest rate the banks will give the loan. Less money means more interest rate the bank will give. So if you understand that particular, if you are aware of that particular concept, then this point you can easily understand. It also lower the cost of funds. Okay, because all the associated banks money has now been accumulated with the SBI, leading to lower cost of funds, lead to what? Better interest rate for the publics. Okay, better means lower interest rate than the other banks or whatever they are offering. Mergers also help to improve the productivity and customer service. This is a very general one, please do remember it. Okay, now what are the steps taken by the government of India to put the public sector banks in order? Means to put the public sector or bank, whatever the banks are there, SBI, Andhra Bank, whatever the banks are there, which are not having disoperational is performance is there, they're not in a particular order. So what government has done, or steps taken by the government to put this banking sector of public sector of government in order? To put the public sector banks house in order, okay, government has taken many series of measures in the last 2-3 years. Okay, the first measure which was taken by the government was every bank was asked to, if they are asking any capital, they need to agree on certain operating performances. With regard to this, I will come in the next slide. Government has also amended loan recovery laws, made more favorable laws towards the banks to recover their loans. This is another important measure taken by the government of India. Merging of associate banks, this is another important, because merging lead to what we have seen a lot of benefits. So merging of associated banks were also another important step taken by the government of India to put the public sector banks in order. Government last year has also enacted insolvency and bankruptcy code. Okay, and empowered the RBI this year to issue directions to the banks to take the defaulter companies to the National Companies Law Tribunal. Okay, RBI was empowered by the government of India, and RBI has also, as because it is a supreme body related to the banking regulation and monitoring. So RBI directed all the banks that they can take any company which is not paying the loans on time, EMIs on time. So all that defaulter companies could be brought down to the National Companies Law Tribunal, where the resolutions can be settled, where the whatever the disputes are there, that could be settled, okay, very easily and hassle-free manner. This is another point. Okay, to make the banking system very efficient, government has taken some measures, as I have already told you. Let us see some. This one, What measures taken by the government to make the banks efficient? The finance ministry, as I have told you, that if any bank wants some capital, some money from the central government, they have to sign a memorandum of understanding. They have to sign a memorandum of understanding. Okay, with this government has tried to link capital infusion to operating performance. So how much capital you want, that will depend on the performance of your various operations you are doing. Operations means maybe you are providing a customer service. Customer service, how you are providing, that is one operation. Giving loans is another operation. Okay, how many accounts you have opened, that is another operation. With regard to financial inclusion, how much you have done, that is another operation. So banks performs various operations. Okay, so whatever the operating performance that I have been talking about, okay, in this paragraph it is there. Whatever the agreements which are made between the bank and the central government, okay, banks have to agree to certain business turnaround activities, such as if the banks are able to reduce the NPAs, okay, if the banks are able to generate adequate return on assets, they can ask for some capital infusion. That is what it is called as what, linking capital infusion to operating performance. Whatever the operations the bank is doing with regard to NPA, with regard to return on the asset, these are also considered as operations only. If any of these many parameters are there, very few I have listed out. Okay, if banks are doing well in any of the operating performance, they would get what, capital infusion from the government. Apart from that, if any banks are not performing well, and they have to shrink their size of the balance sheet and shut down non-profitable branches to make the banking efficient. These are the various steps taken by the government of India. So there was a question with regard to capital infusion and SBI in Prelims 2018. Okay, with reference to the governance of public sector banking in India, consider the following statements. Anyhow, I know that you don't know this. You know it very well. This, to put the public sector banks in order, the merger of associated banks with regard to parent bank of India has been affected. So this is not a assertion and reasoning question that this one A and B both are right, B is the correct explanation of A. So this is not that kind of question. So you can, this is a fact question. Always remember, whenever you get two statement questions, they are always based on what, facts. Concept will not be there. Much of the concept will not be asked. So this is a very simple, very general fact. To put the public sector banks in order, we all are aware of this fact that SBI is associate banks are merged with SBI Bank. Here this is the problem is there with the capital infusion. Capital infusion in public sector banks, okay, by the government has steadily increased, it is said, has it steadily increased in the last decade. Whether it is true or not, that is a question. See, the things which are not important, okay, which has been not regularly often asked in the UPSC, they ask very simple things. So see, nothing is there in this particular statement 1. What he asked is, if anybody is following, okay, just like that, banking related current affairs or banking related information, okay, or even in the budget, this is a particular thing is always mentioned. Okay, this much of capital, recapitalization of banks, you might be hearing that many of the times in the budget itself they pronounce. So if you're any aspirant who is aware of this budget and who is at least following some banking related information, they could easily do it, because nothing technical details are not there, conceptual details are not there. It is a very basic fact that they have asked. Capital infusion over the last decade has steadily increased. So remember one thing, it's not steadily increased, sometimes increase, sometimes decrease. So it's always not increase. In this way it is not there. Increase and decrease, this kind of pattern was there. So this statement becomes wrong. So the answer will be only 1. Okay, sorry, the answer will be only 2. Say statement B is only right. Okay, so thank you guys for hearing to me, and please share as much as you can, and I hope that all this whatever I am bringing may be helpful to you in any of your examinations. Have a nice day. Good day ahead. Bye bye.